Ladies and gentlemen, good day and welcome to the Technoplast Q3 FY23 earnings conference call hosted by PhillipCapital India Private Limited. This conference call may include forward-looking statements. These forward-looking statements involve a number of risks, uncertainties and other factors that could cause actual results to differ mainly from those suggested by the forward-looking statements. These risks and uncertainties include, but are not limited to, our ability to successfully implement our strategy, our growth and expansion plans, obtain regulatory approvals, our provisioning policies, technological changes, investment and business income, cash flow projections, our exposure to market risk as well as other risks. The company does not undertake any obligation to update forward-looking statements to reflect events or circumstances after the date thereof. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhijit Purohit from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Thank you. Good evening, everyone. On behalf of PhillipCapital India Private Limited, I welcome you all to Q3 and 9-month FY23 earnings conference call of Technoplast Limited. From the management, we have with us Mr. Bharat Kumar Vagheria, Managing Director, Mr. Raghupati Tyagarajan, Whole-Time Director, Mr. Sandeep Modi, Senior VP Accounts and Corporate Planning, Mr. Hemant Soni, VP Legal and Corporate Affairs. I now hand over the call to Mr. Bharat Kumar Vagheria for his opening remarks. Over to you, sir.
Thank you, Abhijit, for introducing all of us management side. Now, you all know that it has been a year since now as we lost Mr. Anil Jain, co-founder and managing directors of the company last year, so the 6th of February. But his vision is continue, remain strong with his values. We will continue to work towards his dream of growing the company. The company continued to strengthen its market position in the industrial packaging segment despite challenging global economic conditions. We are pleased to announce a strong performance during the 9th month with the year revenue growth of 19%. The value-added product segment grew by 29%. Year-on-year driven by good demand of the IBC composite cylinder, good order book position for CNG casket coupled with the stable core industrial packaging businesses, increasing popularity of Type 4 LPG composite cylinders will help us to achieve our target set for the years. The results are already announced, but I just walk you through some of the key financial and operational highlights. The key numbers are, on a consolidated basis in Q3 FY23, revenue grew by 20% as compared to corresponding quarter last year, Q3 FY22, and 10% as compared to previous quarter, Q2 FY23. During FY23, on a consolidated basis, net sales stood 1,131 crores as against 943 crores of the previous year. EBITDA was 153 crores as against 137. Profit after tax 61 as against 54. It means net sales increased by 20%. I am glad to tell you where the India is 11%, overseas is 42%. Quite good growth in the overseas market. Volume increased by 16%, India 8%, overseas 37%, because of the company has getting good volumes in the new part of the geographical like USA, where the expansion was there. The result has come out in the previous year. EBITDA has increased by 12%, PAT increased by 14%. EBITDA margin was 13.5% as against 14.5%, decreased by 100 basis points. Margin was slightly impacted owing to challenges macroeconomic environment that we all are aware, too much volatility in the last quarter in the exchanges and the polymer prices, which took some time in the passing to the customer. Now, in the 9-month FY23, on a consolidation basis, sales stood 3,100 crores, and with the previous year, the same 9 months was 2,012 crores. EBITDA achieved 411 crores as against 369. PAT is 185 crores as against 133. 155 crores as against the previous year of 133. Now, key highlights for 9 months. Net sales increased by 19%, India 14%, overseas 29% in the 9 months. Volume 13% overall, India 9%, overseas 23%. EBITDA increased by 12%, PAT increased by 17%. As the volume is increased, PAT is affected in that way. PAT also got same percentage increase. In 9 months, FY23, EBITDA margin was 13.3% as against 14.1%. The slightly 80 basis point is lower. Share of the business, I'm glad to tell you, share of the business of the value-added product grew by 29% in 9 months of FY23 as compared to 9 months of FY22. While established product grew by 16%, the share of the value-added products is 24% of the total sales in FY23 as against 22% in FY22. Now, because of, we have heard that sale in the overseas has grown in terms of the percentage high. Therefore, the share of the India and overseas business revenue in 9 months in terms of the percentage is 64% and 36%, as against 68% and 32% of the previous year. Debt almost remained the same, stood in around 800 crores, and as of 31st March also it was on the same round. So in spite of businesses increased by 20%, debts are on the same level, maintained the company. The capex incurred by the company is 169 crores, which includes 53 crores towards the capacity expansion, re-engineering and automation. But mainly capex incurred this current year is on account of the value-added product, which is CNG, cylinders and IBC. And in this reference, I think just you will see some kind of the companies have sent intimation to the NSE, BSE, reference to the CNG, one largest order received by the company and intimated to the exchanges just 20 minutes before the market closing, because we just got in the night that orders and that has been circulated and informed to the exchanges. It was a large order company has received. It's, in terms of the value, I can say now, because it's a 134 crores value of the order is received company, and this is the single largest order. Now, the consolidation from restructuring, yes, I would like to update, because we all are aware that the boards and shareholders have given the approval. But you know that this process, company has a presence in 10 overseas countries, and it took time in the due diligence process. So that has been completed. But again, it was earlier based on the 2021 financial results. But now as we have completed 2022 calendar year, because in overseas we follow the calendar year. So matter is under discussion with the prospective buyers and with our advisors, and the results of which will come out in the period ahead shortly. So company has still continue and focusing on doing some kind of the disinvestment of overseas business. And further, as you heard my message recently, that overseas business has grown more than 23% in the 19th, so definitely we reserve our right to enhance the value of the sales investment, so which we have lost the period of this last 3-4 months. So very soon this company management will update you time to time in each of the meetings. Now I would like to open the floor to the answer specific questions in this call.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and one on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Hitesh Tong from ICICI Direct. Please go ahead.
Thanks for the opportunity, sir, and congratulations on a good set of numbers for the quarter. Though the number was impressive on a YoY basis, sir. But my question on a bit on a 3-year CAGR basis. The 3-year CAGR basis, the revenue CAGR is still, in a single digit. So I just wanted to understand which business segment, according to you, is underperforming or below our expectation. Segment-wise, if you can throw some light on the performance front, please.
Yeah, I agree. It is, very well, as I think overall company has grown by 20%, but as which is especially composite products is giving more in terms of percentage, and the packaging business overseas has done very well. But India packaging business has grown in the range of around 7 to 8% in terms of the percentage. But if you tell me the overall sale of this product-wise sale, and I tell you as far as 9 months of this FY23 is concerned, the regular product, the packaging, excluding the IBC, because that comes under the value-added product, lifestyle, auto, batteries, all segment, is in the range of around 2,200 crores. We got it, revenue, as against 9 months of the same, 95 crores, so it's all grew by 16.5% if you compare 9 months. But yes, I agree that in the pipe business, it grew only 6% because in the first half, very, very less orders was there. The price too much volatility was there. And thereafter, government has also initiated, released some money to the EPC contractor. And the second half, this business has started picking up. So when Q3 and Q4, company has a good booking as far as pipe orders are concerned. So especially you are asking me which business is the PE pipe business, which is grew hardly in the single digit 6%. All other businesses are more. In value-added products, you will find the sale of the 9 months is 740 crores as against 573, which is grew by 29%. We got the good growth in the IBC. Composite cylinder has a more than 50% growth because the base was very small. Composite product, which include LPG and CNG but together. And at least in the next 2 to 3 years, you will see more than 100% growth in the composite cylinder business because base is very small and companies market demand is more, and company is also doing expansion, substantial expansion in the composite cylinder for CNG application. So another product is the MOX film is also, which is grew hardly 8%. So these two products where the business growth is less than in single digit. Otherwise, therefore the average growth is 19%, which we have seen in the first 9 months.
Sir, so going forward, let's say for the Q4, how the demand recovery you are seeing on the ground level for those products which are not performing, and if you can give some kind of future guidance on the other segments also as far as the revenue growth is concerned, that will be very helpful.
Yeah, I noted your point. Normally, we don't provide guidance for that quarter. Was already 2 months is past of the current quarter. But as far as Q3 as business, we did 1,131 crores. So definitely Q4 will be the higher. And you see the past track record always. In the first half, we do 45%. Q3, we do 27 to 28%. But Q4, always we used to do around 30% business. So definitely, year closing, we are looking for more than 4,200 crore business we are expecting. So definitely, this quarter, we will have more than 1,200 crore business. And especially Q4, we have a good order book of the composite products, good order book for the pipe, that all will be executed. And the packaging business, as we are sure, we are taking a growth of in the range of 10 to 12% only. But definitely overall in a year we can say 22-23 we should grow in terms of the volume 15% and value terms also will be around the 16 to 17%. Is our projections currently. But certainly, if you ask me the next year, definitely looking to the growth, looking to the product in hand, looking to the expansion plan of the composite products in the company, because another 2-3 products we have developed in composites, which has a good demand we are expecting. So overall, I can say at least for 23, 24 also, whatever market condition may be, but we are definitely going to grow around 15% in the period of 23-24.
Okay. And so my next question on the gross margin front, though you have, given some input saying that there was volatility in the raw material prices.
Yes.
But sir, I just want to understand when our value-added product categories have grown so sharply, even on a YOY basis for the quarter also and for 9 months also, the gross margin, there was a pressure on the gross margin. The gross margin is still much below than our pre-COVID level of gross margin. I understand that there would have been a delay on the passing of the prices and all, but I just wanted to understand what is there any kind of structural issue, or say so this is the margin you are happy with, or the gross margin you see will improve going forward. I just want to understand which kind of gross margin should we look going forward from the current level, especially when your raw material prices have again moving up.
No, it's a good question asked by you, but one thing I am just clarifying the two way. You have asked me the COVID period and the later on. COVID period, you know that many restrictions was there. Initially if we can say the 2021, all the production was not allowed, only the essential product were there, packaging products. And at that time, because of the COVID restriction and the limited supply of the raw material, product availability, we have increased the prices also. So if you take me the overall product margin, as we have always suggested, will be in the range of 14 to 15%. Yes, COVID period, there was certain COVID expenses, additional expenses was there, therefore we have asked for increase in the prices. But now as far as 22-23 is concerned, everything has stabilized, percentage of the business revenue was also stabilized. And I agree that business of the composite product is increasing as 22% increase to 24%. Therefore, we have seen that there is a substantial improvement in terms of if you see the last quarter of September, where the EBITDA percentage was 13.1%, which is now increased to 13.5%. Further, as the whole of the year, I am looking that it should be around 13.8%, means I can say near to 14%. But yes, if you ask me, the year of next year, 23-24 is concerned, definitely will surpass 14% because value of the value-added products are going to increase. In other words, I tell you, the polymer prices increase or decrease, we have a system of passing on because 92% business we do B2B directly. All educated customers, when price increase there, we pass on to them. If price decrease there, we pass on to them. Only the good two businesses where are there, like composite products, where we have order booking, we always keep the reasonable and good margin, looking to the contingency and then the price fixed for the yearly contract. So we always keep that much in hand on account of the contingency. Further, PE pipe business is there, where we also take the order very cautiously, looking to the market trend. But we know that EBITDA margin in that product is in the range of 11 to 12%. So we have to work within that for existing capacity utilization in that business. And that's going, and as I mentioned in my last call also, that we are not going to expand in pipe business because it's the low EBITDA margin business. We will do our focus on the value-added products and the composite products. But yes, if you ask me the futures, company is focusing and management is very increased in the operating margin, and it will be in the range of between 14 to 15.5%. 1.5% I am keeping the range on account of the transfer means pass on of the price increase or decrease. But certainly, it's 14% be our target. In addition to that, because everything is linked with the improvement of the ROC part, because when the margin will improve, then definitely ROC is, we have not changed any focus on the ROC. Definitely by 25-26, we are targeting to achieve ROC over 19% by changing the combination of established product and the value-added products.
Okay. Sir, my last question is about the LPG cylinder, what we are delivering to on one of the oil and gas company, the IOCL. So, how much volume and value we have generated in Q3 by supplying them?
Actually, as far as Q3, if you are asking me, because you know that LPG cylinder, we got the approval for more than 48 countries, and I'm glad to tell you, every quarter we add 1 or 2 countries, and my supply is increasing that reason. You know that when before the IOCL order, even company was having a good order book and supplying to various countries. Now, I'm glad to tell you, your company cylinder is now approved in Korea, approved in Taiwan, approved in Sudan. All government have visited our plant. So regular orders are coming from that things also. So now, as far as you are asking me, as per the quarter is concerned, around 288,000 cylinders in this quarter. But you ask me the 9 months, we crossed 7 lakh cylinders as the LPG cylinders are concerned.
Sir, I'm asking particular for the domestic LPG player, I mean IOCL company, how much on a volume terms and value terms, how much have you delivered?
Market don't available, but that supply is on and services is on to the IOCL customer.
Okay, and have you received any kind of further indication of a repeated order or anything else?
I think I have mentioned in my previous call also. 1 year already extension is there in the order itself. Without changing the price terms, they can extend the same, and they have extended also that next year also the same quantity and same price will continue. And the extension will be done only, repeat orders.
Okay, so sir, in the previous call you have also mentioned that on the overall composite product composite cylinder category, you have given a revenue guidance of 300 crore for FY23 or about 500 crore by FY24. So obviously with the new order in the hand in the cascade category, you want to revise that guidance upward for composite?
I have a one restriction, you know very well, because I think if you go through my recent, just 1 hour back, I have given my intimation to the exchange and BSE and NSE that my capacity 100% booked as far as CNG cascade part is concerned, because I am completing the expansion phase 1. Now phase 2 expansion, which is going to be completed in January 24. So as far as guidance part is concerned, for the composite product, LPG and CNG put together, in the range of around 500 crores, I am taking for 23-24. Not much, because I don't have available capacity.
Okay, 500 crores.
Yes, over 500 crores. Maybe plus or minus 5% maximum.
Okay, sir. Sir, if I have more question, I will come.
Yeah, you will welcome.
Thank you, sir.
Thank you. The next question is on the line of Sandeep Dixit from Arjav Partners. Please go ahead.
Everything is answered. Thank you. Nothing to ask.
Thank you, sir. We'll move on to the next question. That is on the line of Panak, an individual investor. Please go ahead. Mr. Panak, your line is in the talk mode. Please go ahead. As there's no response from the current participant, we'll move on to the next. That is on the line of Mahindra Jain from Way to Wealth. Please go ahead.
Sir, Namaste Bharatji.
Yeah, Namaste Mahindra Ji.
Sir, my question was regarding only this divestment process or strategic partnership and all these things. we are like discussing last so many quarters. So if there is any hurdle or any progress which you can share with us on that direction, like because of this being a, packaging business and not in having more value-added business, that's why we are suffering some issues or something like that? Or can you just put some highlight? What is the right now the process is going on? In which direction like this?
Mahendraji, I know your concern and you are right that our talk is ongoing for last 3 quarters because initially you know that we were talking last year 22-23 and it is delayed by 3 months because of the demise of our Honorable Managing Director. Subsequently, the remaining promoters took back this process on and you know that the overseas business has presence in the 10 countries and all are in different geographies. One is the USA, separate in Southeast Asia, plus Far East Asia, Taiwan and Middle East. So it took time. In fact, we were estimating that we will be able to complete in the 6 to 8 months time. But considering the due diligence process, it took more time. So now, and as we complete the due diligence process, then the year of the 2022 end. So as I mentioned in my first remark also, we have not hold up any process. It is on. But at the same time, we have seen the growth also. More than 30% business has grown overseas. Okay. So as far as this business is concerned, good business is there. But again, as a promoter, as an investor, we also would like to have a good value is concerned, overseas party is concerned. So we are talking with them. And now we are talking overseas as a whole also and the part that open is for the discussion. Yeah. And another thing, based on the 22, that decision will be come out, and I think I'm not asking you much time, but yes, in the next 90 days, some result will come out.
Okay.
The packaging business again, overseas we do packaging business, and nothing to worry. Packaging business has grown, and further we are expecting growth in 23 also for more than 12%.
Correct. Sir, this domestic packaging business, are you planning any restructuring or can you put some highlight on that?
Not now, because you know very well, because it's a very cumbersome process. At many locations, I do packaging product, I do composite product. Because just I tell you, packaging product, I use the blow molding and injection molding process. For my composite product also, I use the blow molding and I use the injection molding. Then we use some kind of the other composite product. So there is the crisscrossing of the process. So it is because in India we have 16 manufacturing locations, and composite products we are manufacturing at 4 plus to 6 locations. So it's a time-taking process, and I can't comment right now. But yes, my first objective, disinvestment of the majority stake for the overseas business in whole or in part. Then second stage, we will take the India restructuring also, not now. When the business is growing and the good growth is there, and again, I repeat that, we are not compromising of our business of the value-added products because we have a leverage of the balance sheet is good. We have a capacity of the borrowing capacity. So CNG expansion, as the demand is increasing, yes, we are doing the expansion and we are not compromising any value-added product business based on my disinvestment. We have not planned that. That was one of the objects. If I disinvest, it will be benefit. I will do the expansion in CNG. It will benefit the shareholder and repayment of the debt. These are the 3 objectives of the disinvestment. Still there, as that will materialize, it will do, but not at the cost of the expansion of the composite product. That will carry on without any, whether it's disinvestment happens or not happens.
Yes. And that is the biggest advantage that if it happens, then we can take care of working capital, long-term loan and all these things like.
Yes, I agree, Mahendraji, you are right. We are worried because cost of the fund has also increased. In second thing, working capital cycle time to time it is improving. And you know that COVID period when reached back to the 130 days, now reduced to the around, we are targeting to less than 100 days in the next 6 months time. Because the value-added product share is increasing, which is currently 24%, and I am targeting by 25-26, my value-added product share will be 40%, and other share will be 60%. By that time, definitely working capital cycle time will be in the near to 80 to 85 days.
Correct. Okay, sir. Sir, anything you would like to share regarding hydrogen cylinder progress, like anything? Very long term, but
yes.
would you like to share anything?
I give Mr. Raghupati because last time he has clarified what is hydrogen cylinder and when he will be there, because my expansion line is also covering some kind of the development part that Mr. My colleague partner Raghupati will expand to you.
Yes, good afternoon, sir. We have been working on the composite cylinders, as Bharat has been informing you. We've been progressing very well as far as the high pressure cylinders of CNG application is concerned. Hydrogen theoretically comes in as the next step of this development process, wherein the working pressure for CNG is about, let's say, 250 bar. So hydrogen would be 350 bar and 500 bar and 700 bar. So these are the steps at which the local PESO will also give their approvals. So our expansion that we are also planning for the composite cylinders has been incorporated to ensure that we are in a position to use a part of our capacity for hydrogen cylinder manufacture as well. We are in discussions with quite a number of potential users also. We recently participated in this India Energy Week, which was inaugurated by Honorable Prime Minister Modi as well, where there's a lot of emphasis on CNG, natural gas, as well as for hydrogen. There has been a fantastic response that has been received. There are people who are in the pipeline wanting us to really develop, because we are definitely going to be the first and for a long time the only company in the country who would be able to offer the hydrogen cylinders as well. So we are working very vigorously as the new equipments are also in place. By the year end, we should be in a position to open up the hydrogen cylinders. I hope.
Sorry to interrupt, sir. Your audio is breaking up.
Hello, please.
Sir, your audio is breaking up.
Okay. I do not know where it broke. I just would summarize once again. We are working definitely towards the development of the hydrogen cylinders. Theoretically, it's one step over the development of the CNG cylinders. There are enough inquiries that are there in the pipeline for hydrogen cylinders also. We have recently participated in the India Energy Week, where there has been a recognition for Technoplast as a good manufacturer of high pressure cylinders. So there is very clearly a pipeline requirement. Our plan to manufacture is coinciding with the investment that we are doing for expansion of this composite project, and by this year end we should be in a position to have this announcement also of an indigenous manufacture of hydrogen cylinder as well.
Okay. Yeah, thank you.
Welcome.
Thank you. The next question is from the line of Umang Shah from India Bridge Capital. Please go ahead.
Hi, sir. Thank you for taking my question. Am I audible?
Yeah.
Sir, the first question was, can you calculate the difference between the working capital requirements for the value-added products and for the base business?
Yeah, if you ask me, two things are different. The value-added products, which includes IBC, then is the mark film, and especially composite products.
Yeah.
Composite products, I tell you, is a voluminous business, because when anybody gives us the order, they give us in certain volumes. I have to produce that. Then the inspection carrying out, I have to carry out the inventory, because in composite product, most of the items are imported, inputs are there, which the long delivery process times. I have to carry the inventory, looking to the contingencies of the shipping line, condition delivery time. But in nutshell, I can say the difference between the working capital cycle time of the established product and the value-added product. If established product needs a working capital cycle time of around, in normal, I am telling you, 110 days, but in case of a value-added product, it will be 70 days.
Okay. So, sir, the reason I'm asking this question is, if I look at long-term fundamentals of the company on a ROC or an ROE front, the company has not been able to reach 15%, 14% in the last 10 to 15 years. So, on a return on equity front, how do you think about the business overall? Do we think that it's because of less utilization of the capacities, or do you think it's because of higher investments in working capital?
In fact, I tell you, apart from this COVID period, where the working capital cycle was increased substantially in last 2 years, 19, 20, 2021, and 22, 2.5 years, something COVID period. Prior to that, my working capital cycle time was 85, 90 days. So we are coming back on that period. Target is there. In fact, by end of this 23, we are keeping target of less than 100 days. But definitely, I am keeping my internal target of 85 to 90 days in the period of 23-24. And as I mentioned to you, value-added product, when the sale will be 40% and this sale will be 60% by 25-26, definitely net working capital cycle time will be in the range of 75 days.
Right. And what would be the impact on it?
Again, I just add it further. Another thing, ROC part is concerned, currently which is in the range of 13%. In the next 3 years' time, by 25-26, we are targeting ROC over 19%. And that change as that ROC will achieve it by improving the working of the cycle time, by improving the margins, EBITDA margins currently, paid margins, all put together, there will be the improvement in the ROC.
Right, sir. And sir, one question is, you had a massive capex program from 2010 to 2014, where you almost doubled the gross block from 800 crores to almost 1,500 crores. After which, in last 5-6 years, the capex has been more or less to the extent of maintenance capex, broadly near there. So, first question is, the machinery that you had installed in the first capex cycle of 2010-2014, how long can it further go for, and do you have any major maintenance capex coming up?
I expand in two ways. As you are right, as you know that capex company has did the capex in the, you are talking about 2010-11 onwards, first 5-6 years, company has expanded overseas, and which, as I mentioned when you were on the call, that the fruits are coming, and that fruits will come when the company management will take the decision of the disinvestment. And I tell you, definitely the investment which we received the return in the period ahead, and further, as the capex which we are currently incurring is the value-added products measure, and that is where the EBITDA margins are also higher compared to regular products where the EBITDA margin is in the range of 11 to 14%, but value-added products in the range of around 16 to 20% is the margin. So company is making more investment, less working of the cycle time. So these are the return they plan, and 3 years, as I mentioned to you, working of the cycle time will also be reduced.
Right. And sir, one final question is, what is the update cycle in machinery? I mean, machinery of yours would have an age of 15 to 20 years, but the new machinery might make the current machinery obsolete, right?
I explain it this way. You consider as a plant, because in the processing industry there is an investment in the molding machines, maybe injection, extrusion, blow, whatever may be there.
Correct.
In addition to that, we have a blow molds, where depends on the cycle time, depends on the how many products you have made from that. But normally we consider life of the machines is around the 15 years we considered. Life of the mold we consider 10 years as per the policy. And we take always, because we are 25 years old, more than 25 years old company. Okay. So from manufacturing side, we normally automation, repairs and maintenance cost we consider 50 to 60% of our depreciation amount we consider required on account of the maintenance and to maintain the capacity which we were having at that time to maintain that machines. Okay. And mold replacement take based on the customer requirement, based on the customization of the product, and based on the how many products you have produced from that molds. So around, I consider you right that we have, in fact, I tell you, my capex in the last 3-4 years in the range of 150 to 200 crores, except in the COVID period it was less. But now, as you have seen, the product which is CNG product, major focus is on the value-added product companies incurring. And another thing also I would like to tell you, yes, this year capex will be in the range of around 225 crores, considering the major expansion in the CNG product, where the order booking is more and the demand is more and we have a less capacity. But yes, next year onwards, definitely the capex will be less than 200 net of that thing, because company has some kind of the assets which are not in use, some kind of the assets which have been to be disposed of. So that's considering the net of the capex for next year will be less than 150 crores because the company will do the dispose of the assets which have been held for the sale.
Right. Got it, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Ankur, an individual investor. Please go ahead.
Good evening, everyone. Thank you for giving me an opportunity to raise my question. My question is regarding the disinvestment of the foreign business. Sir, are we talking to a single buyer or we have different buyers for different countries for the foreign business?
I tell you, if those who are in this packaging business, I will give this answer by my partner, Mr. Raghupati will provide it because he is handling this matter with the advisors and the party.
We have talks ongoing with the strategic investors, two of them, and financial investors. There are multiple people who are interested. Talks are in an advanced stage with one of the strategic investors where the diligence process is already almost completed. So that's where the process is. There are other people also in the standby, wanting to expressing their interest, especially after the 22 results have also been announced. So there are options that are there being considered by the company. Okay.
And so one thing more, as far as the revenue share is concerned, it is about 34% for the foreign business. And if in case I see the book value of the company per share is about 95, what would be the share of the book value of the foreign business as compared to the Indian business?
I think I have to work out. That's where we have not worked out. But I will work out and then we'll query your answer because I'm not worked out in that way. That figures are not available with me right now.
Yeah, because I was interested in when you disinvest, what would be the balance book value of the company be after disinvestment? That was my query.
Having the overseas turnover of in the range of around 1,200 crores. If you tell me that as we are estimating 1,400 crores, 4,200 crore business of overall business, out of that 1,200 crores business we are estimating from the overseas. So balance 3,000 crores business is in India. And as I have told last time also, whatever business we will lose from the overseas disinvestment, that will be created by way of a value-added product in the next 3 years' time in India.
Yes, sir. I'm very hopeful of that. But the only book, how will the book value be affected after disinvestment of the company? That will not depend on the revenue share, but
I think you can share your number with my I can say investor relationship manager, and we'll provide you that working.
Sure, sir. One last question, sir, is regarding the oxygen cylinders that you talked about that you're working on. Is there any development on that regard?
Yes, I am very pleased to inform you that the development of the oxygen cylinder has been completed. The in-house testing results have been positive. We've been able to surpass the requirement to the PESO for approval for 3 different sizes. It's just a matter of time and we should get the formal approval. The capacities for the manufacturer are also being put in place. We should be able to launch it probably by April of this year.
Thanks a lot, sir. That's all from my side.
Thank you.
Thank you. The next question is from the line of Sureshwaran, an individual investor. Please go ahead.
Yeah. Good evening, sir.
Good evening.
Sir, good evening. Sir, we have been discussing about onboard CNG cylinder actually for more than 1 year. Have we got any order for this one?
Definitely, as far as onboard cylinders are concerned, we would be launching it only coinciding with the new manufacturing program which is coming on board by end of this year, because whatever current capacities are available, they are all being utilized for the cascade part of the requirement. And even as per the chain of requirement goes, the cylinders are normally put into the supply part of it, wherein the cascades are put into use, and subsequently as this gas moves down to the retail station, then they will further find their way to among the retail users. So these cylinders for onboard applications will also be developed by this year, and as we have some surplus capacity available.
Okay, sir. Okay, sir. And my next question regarding the MOX flames. So what is the advantage of our MOX flames? Actually, I see many players are offering with a 2-year warranty. for pond liner and tank covers. What is our advantage to crack this market?
Yeah, as far as the MOX film is concerned, it is a process of manufacture which keeps us distinctly apart from the others, because here the process is technologically oriented, a little more advanced in terms of how we are in a position to manufacture a cross-laminated or a MOX film. We are able to give it a better tensile strength as compared to any other film, and we are able to get that price to grammage advantage for sure. All the other people, I would put it 7 out of 10 in the market today would claim to be a cross-laminated film, but half of them are not even there as a cross-laminated film. They are, kind of deceptively similar, I would say that. It's a matter of time when these films also start performing differently, and the consumer will be in a position to, find the advantage. So we are sticking very securely to the process that we have adopted, and will continue to deliver these superior products that we do and offer.
Okay, sir. Okay, sir. And my question is regarding the high-tech, another high-tech product, DEF urea tanks. So we are getting, what is the reception, sir? The market now?
Yes.
We are getting order for this one.
Yes, as you are aware that urea tank is used for the urea applications which goes along with the diesel as per the BS6 norms are concerned. These have been put into place. We have already developed 3 different sizes of urea tanks which we are supplying to OEMs. The tank is doing exceptionally well. There are additional sizes that have also been ordered which should see further growth in the business. So we are working with OEM. This is a strictly OEM product. The product is manufactured using the technological advantage that we have, and we are able to successfully exploit. I think there are very few successful players offering these urea tanks in the country today.
Okay, sir. Are we expecting any, we are working for foreign order also from other countries for this OEM tank?
Admitted potential would exist in terms of technology, in terms of the quality, but then obviously when we are looking at the tank, it is a hollow product, you would end up exporting air. So there would be preference by the OEMs to develop local players. They don't normally want to develop a player or depend on a player who is situated abroad. In fact, they not only want it within the country, but they want it in their own district and region. So OEM products normally are, you can develop the business if you are there in the neighborhood.
Okay, sir. Okay, sir. And my next question, sir. Sir, now the lot of big players are coming for green hydrogen. Okay.
Yes.
So so they have deep pocket. They can manufacture hydrogen cylinder also. What do you think, sir? Actually, they can manufacture hydrogen cylinder because it's a small part of their business as a backward integration. So then, in that sense, how can we compete?
Well, admittedly, the process of manufacture of hydrogen cylinders is not very, very easy. People who would want to do that will require a lot of capex that will be required to be done. When you are in the business of making hydrogen globally, we are yet to experience any single hydrogen manufacturer today in the world who has been able to develop a hydrogen cylinder successfully. We are very clear about it. We will develop the hydrogen cylinder. There will not be one, but there will be 20 manufacturers of hydrogen, because it is a heavily decentralized process of manufacture of hydrogen. So over a period of time, you will find that hydrogen process of manufacture will start almost in every nook and corner, because at the end of the day, you electrolyze water and you get hydrogen. And if you are in a position to provide green power to it, then you get green hydrogen. So wherever the hydrogen is manufactured, the biggest challenge will be how this lightweight gas would be able to be captured in a cylinder, and what pressure you can do so that the cost of carrying the cylinder would be as optimum as possible. So we are able to foresee that whatever the strategy that we have adopted should be able to see us very successfully in the years to ahead. We are not really bothered about such a possibility.
Okay, sir. Okay, sir. Then my last question is, still are we looking for disinvestment of battery division, sir, or battery division?
Yeah, I think yes, you mean to say we are open, but not as a distressor, because the battery division is self-sustained company, self-product company, and yes, I know that ROC from that business hardly 7 to 8%, But yes, that company is also developing the electrical batteries, lithium-ion batteries. Development is on. We have produced some kind of the samples, submitted to some authorities for the approvals, for especially two-wheelers and three-wheelers. But yes, we are open. If good value we are getting along with our returns, we can discuss with them and do it.
Okay, sir. Okay, sir. That's all from me, sir. Thank you. Thank you for answering my question.
Yeah.
Thank you. The next question is from the line of Hiten Boricha from Joinder Capital. Please go ahead.
Hello.
Yeah.
Yeah, sir. Thank you for the opportunity, sir. So most of my questions have been answered. I have only one or two questions left. The first is on the guidance you have given 15% growth for FY24 as well as FY23. Would you like to give it the breakup for value and volume, sir?
Oh, there is a different products are there. Volume will be each of the segment. There is a different volume. I tell you, the guidance I am giving over 20%. If you ask me, the established products and the value-added product, I can tell you, value-added product we are expecting growth of around 25%, more than 25%. Existing product, established product, we are projecting growth of around between 12%. So combined growth, definitely 12%.
So sorry, sir, but your voice is breaking. You told value-added product growth is 25% and established is, I missed that number.
Yeah, established product in the range of 10 to 12%, and products around more than 25%. You can take 30% because the CNG products, cascade products which we are expanded is going to get as against current year projections of business of around 350 crores. The next year we are projecting around 550 crores. So the growth is more than 40%, especially in CNG product. But if you take the entire value-added product growth, will be over 25%. So combined, we are sure and we will achieve the revenue over 15%. Volume and both.
Okay. So 15% for this year and any number for FY24, sir?
Number you can take as I have in my call just recently. I mentioned 3,100 crore revenue is already achieved in the 9 months. So we are projecting this year, considering this Q4 quarter, in the range of around 4,200 crores. It will take 15% on 4,200 crores, which works out around 4,800 crores. But we will do our best, if possible. If prices also remain on the higher side, we can get 5,000 crores also. But you know the revenue is dependent on the polymer prices. But yes, we are sure as far as margin is concerned, we will be able to achieve EBITDA margin in the range of 14%.
Okay. Yeah, sir. Thank you. So just last question on the divestment side. Would you like to give any ballpark number? What kind of inflow we are expecting from this divestment? Assuming we are selling the whole business.
Yeah, I know that because the sale can happen in the part, can happen in the full. And again, it will be the disinvestment maybe in the range of 70 to 80%. Percentages are different. So exactly figure of the inflow cannot be given. But I tell you, as initially we have kept target, if for example I get 1,000 crores, then that will be used for the repayment. 50% will be used for the repayment of the debt. Balance benefit to the shareholders, because I am also the one of the shareholders, investor is there, and the balance will be used expansion of CNG product, which already we have talked, and you will see my communication, which is sent back 1.5 hours back, it is sent to the exchange also, and that expansion is already on committed, and we are going to get it done.
Cool, so around 1,000 crore, right? Okay. Hello.
You can take it roughly. I give you the example of that.
Okay, yeah. Yes. Thank you, sir.
1,000 crores for 100% value, then what will be the percentage of, if I say 80%, then I will get 800 crores less, depending on how percentage this investment, depending on because we have seen in the overseas, is the practicing, nobody sell 100%, always continue, because wherever we have also bought some businesses in the last 10 years, we bought initially 70%, then later on, Later on, we bought the balance equities also and become today 100%.
But this 1,000 crores is pre-tax number, right, sir?
Tax-wise, we have to see the each of the countries' tax rules are different, each of the region, because we are holding this through our holding companies in the overseas countries, different regions. So taxation, you know, the overseas taxation is the rate in the range of 20%. Pre and post tax, we will see depending on the each of the country liabilities. Because if I have a holding company in Singapore, there is no tax on the capital gain tax. But I have now I just heard in Middle East there is some taxation rules that come out recently in 2023. So it worked out when the actual transaction will take place. In India, yes, India, if any India disinvestment, but most of the companies are through the holding overseas. But the companies which are holding through the India, you know, the tax liability is in the range of 25%. The exact amount of the taxation worked out when we will be the near to the transaction. So you can take it. It is a pre-tax working, which I have just given you the example.
Okay. Thank you for the clarity, sir. Thank you.
Thank you.
Thank you. The next question is on the line of Panak, an individual investor. Please go ahead.
I think last time he had come. Panak? He is not on the line, I think. Last time he was there. Panak?
As there's no response from the current participant, we'll move on to the next. That is on the line of Manish Omar from Manish Investments. Please go ahead. Manish, your line is unmuted. Please go ahead.
I think he is also not there.
There's no response from the current participant. Participants, if you wish to ask a question, you may please press star and 1. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
Yeah, I would like to convey thanks to all participants who heard carefully about the Q3 and 9 months results of the company. And definitely, as I promised, we will try our best to keep looking to the present scenario and to achieve the targeted revenue of the company. And as I mentioned in the beginning remarks, to fulfill and to complete the dreams of our Honorable Sri Anil Jain. We'll try our best. Thank you very much.
Thank you, members of the management team. Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.